Everyone, Christine Kopr, Senior VP of Sales at Sotheby's Realty in Vancouver, BC. Thank you for joining me for my April 2022 monthly stat report. Now, this month, we're going to review last month's numbers, of course, the numbers for April as we're in May already. And we're also going to take a look at how have some of the new shifts in the market, such as rising interest rates, impacted the market in previous years, so that you have an idea of what could potentially happen as we move into 2020. So let's get started. As you know, I have a favorite graph that I like to go through, and we're going to talk about these numbers. So I'm just going to share my screen here for you, and we'll get rolling. Okay, great. So sales, 3,232 sales. That's up, or sorry, down 34% year over year. So sales are down this year over April last year. Now, hold on, people, the sky is not falling. Last April was some of the highest sales on record all time for the Real Estate Board of Greater Vancouver that's been around for decades. So let's not panic. Obviously, you're not going to come in at pandemonium record-breaking sales the following year. So a little bit of a pullback is accepted. And our sales they're down 34% year over year, down 27% month over month, but they are 1.5% above the 10-year average. So we need to focus on what's normal, because we all know that the last couple of years have not been normal, okay? And that's not sustainable. Markets go up and down, and eventually they average out. New listings. So how many new homes came on the market? We all know inventory is an issue. CMHC brilliantly, launched that today in their latest release. 6,107 homes came on the market in the month of April. Now that's down 23% year over year when we were in the midst of COVID. Not that many listings coming on the market in the month of April, and it's down 8.5% month over month. In fact, it's kind of an interesting trend. It's been feeling like we had our spring market between January and about now. But what we want to keep an eye on is what are the new listings going to do as things trend forward and as we have more information, and the interest rate changes may have some time to trickle into the marketplace. So the total amount of listings that we have available for you to buy right now is 8,796 homes between Whistler and Maple Ridge. That doesn't include the Fraser Valley. Okay, now we have 8,796 homes available. That's down 14% year over year and up 15% month over month in terms of inventory. So less inventory than we had last spring when things were booming, and that was like arguably a peak. And now we have a little bit more inventory than last month. We definitely need it. We need a moderate amount of more listings to come onto the marketplace. And because of that, we are looking at months of inventory. This is my favorite number. It gives you an idea of what's happening in the marketplace and where prices should be heading. And it's because it's a real easy snapshot at supply and demand. So for those of you that know, I always look at months of inventory. 0 to 4 months of inventory. How many months of inventory is available to buy? 4 and below is considered a seller's market. Between 4 and 6 months of inventory is a balanced market. Above 6 months of inventory is considered a buyer's market. There's just simply more inventory than there are the amount of buyers or the demand in the equation. So as you can see, we're sitting at 2.7 months of inventory. This is a bit up from last month in March, which truly was an incredible month. And we've been sitting below 4 months of inventory for the last 4 months. And we're going to look at other graphs here. As you can see, here we are. 2022 is down here. You can see we've been sitting in extremely low months of inventory for a long time. Now, again, the months of inventory is how many sales are there. If this amount of sales or this amount of demand continues to be consistent, and we only have 8,700 homes available for sale, and we don't add more by new listings, then how many months would it take at this demand to sell through all this inventory? And so at 87, that 100 divided by 3,200 gives us 2.7 months of inventory. So still very much a seller's market. Now, this is something that we really need to keep our eyes on as we move forward. Benchmark price, of course, when you have a seller's market, it puts upward pressure on prices because you have more buyers than you have in terms of inventory. And so they bid the prices up. And so we've got a benchmark price of 1.374 million for the Border Greater Vancouver. That's up 19% year over year and up 1% month over month. Now, the increase in prices is definitely stabilizing. We had seen, 3, 4, 5% increases on a monthly basis. Totally not sustainable. We're starting to see more moderation, 1%. That's a decent amount of price growth. Now we need to see what's going to happen in the coming months. So interest rates. I'm really excited to talk about interest rates. In April, we had an interest rate increase. And I was wrong. I didn't expect the Bank of Canada to come in and do a 50 basis point increase. Okay, so we had a pretty big jump, a 50 basis point increase. That's 0.5% in the month of April. That's a big difference. And in fact, it was actually one of the largest interest rate hikes that the Bank of Canada has done in several decades. My thought process is they were going to do, a couple quarter point, 0.25% increases to start help slowing down inflation and give some of that change, that time to penetrate the market. Because see what happened in COVID, we had a 1.5 point drop to try to stimulate the economy. You can see that right here. You can see this big cliff of interest rate. And then it was just, prime was next to nothing. Obviously for those of you that took advantage of that, there was heavy discounts in the market. So, people were getting mortgages at about, 1.5, 1.25 points. Is unbelievable to get anything locked in at that time. That really stimulated the market, in addition to other factors such as COVID, change of lifestyle, looking for space, outdoor space, working from home, a booming population, the people like myself and the boomers babies having children, needing more space. And of course, immigration. We're having the highest immigration we've ever had in this country. So people coming to, usually enter Vancouver and Toronto and move out from there, and they're looking for homes. So in this interest rate increase was something that happened in April, and not a lot of time has passed since then. So we need to see how that's going to impact buyers, because some people have had rate holds since the beginning of this year, and very soon those rate holds are going to expire, and they're going to start to see new, like if you're a buyer, new mortgage payments for the same amount of money you would have borrowed just a couple of months ago. And in fact, it's going to decrease the amount of money people can borrow, because as the payment goes up, the bank is going to decrease the amount of money that they lend you to keep you within those healthy ratios. So what's happened in the past is probably the question that you have with respect to interest rate increases and how they've impacted the market. So as we look at what we've been experiencing here for the last little while, I'm just going to go here again. You can see that we've been in this seller's market, very low months of inventory going from 2002 all the way to 2021. And then this is what it looked like in 2020. This is COVID. This is where the interest rates dropped. You can see the months of inventory just exploded, and it takes 2 or 3 or 4 months for high inventory to decrease prices. There were some great steals at this point in time. Price acceleration did moderate. You can see prices went from 0.034, 0.036 down to 0.28, 2.5 here. So you can see that there was a price decrease when we had higher months of inventory, less sales, more inventory, higher months of inventory. And then that started to, the demand started to kick in as we had these lower interest rates and people were changing their lifestyles and all the other factors that were already in place in our market. But if we go back to 2019, right before COVID, actually, we were coming out of a bad downturn, I would say, in the marketplace. we had higher months of inventory. We're more in a balanced market here, but I remember back in the fall of 2019, starting to feel the market pick up. But prior to that, everything in red on the screen here are prices decreasing. And I wanted to share this because right here, January 2018 marks the history of when the government decided to launch the qualifying rate. So if you were going to go for a mortgage, no longer were you qualifying based on what your mortgage payment would be on today's on the interest rate that you were getting. The government decided that we're going to stress test you and we're going to make sure that you can afford that mortgage payment if interest rates went 2% higher, because of course, leading up to that, we were coming out of the 2008 financial crisis downturn, etc. And interest rates had been historically very, very low. And there's always concerns that interest rates were going to go up at some point in time. And the government wanted to make sure that people weren't taking on too much debt. So January 1st marked the new stress test. So even if you were getting a mortgage at 3%, you had to be able to afford the mortgage payment at 5%. And based on that is how much money they would lend you. So buyers' buying capacity went down on average about 8% because they got 8% less money to purchase with. But they still got the mortgage. They only had to make the payment at the current rate. They just want to make sure you could afford the payment at the higher rate. And we're starting to go through that right now. Now, when this was implemented, because when you get a rate hold, you have up to 120 days to utilize that rate hold. Any buyers that had been qualified prior to this event had, even if you got qualified at the end of December of 2017, you had 120 days to try to purchase a property and take advantage of being qualifying under the old rules. So basically you were qualifying at a rate that was 2% lower, and the bank had essentially raised interest rates 2% without actually raising interest rates 2% and affecting the rest of our economy. So I remember in May, like as we ticked into these few months here, it started to get a little bit weird in April, but in May, it was like a knife. You could just tell the market shifted and everything just kind of came to a halt. And now we were in a new market environment. Buyers had less money. Sellers had just come out of this wicked boom where prices had just got, elevated so drastically coming out of 2016 and 2017. And now nobody knew what the new market price was going to be. So sales start to slow down. Buyers didn't know how much to pay. They start worrying prices are going to go down. It's a self-fulfilling prophecy. It's called confidence, right? You think things are going to get lower, then you have a harder time getting into the market. Sellers still had expectations of these higher price points. And then people thought, and then obviously you had some sellers going, hey, if there's a time to sell, I should probably do it now before prices go down. So inventory started to accumulate on the market. We had less sales. And because of that, months of inventory started to increase, and you could start to see the prices trending down through the year. And then it kept going down, all the way through 2019 until about mid 2019, when things started to tighten up again. The market balanced itself out. And you can see here we had, a high of almost 10 months of inventory. It was absolutely incredible. And things started to balance out. So is this what's going to happen in the future? We have no idea. Is it possible that we're going to see decreasing prices as we move forward? Strongly possible, just because we have a new reality that we're going to be living in, and we're going to see how this all plays out. However, we still have extremely low inventory. So we have to see how things work out with the supply side of the situation. Now, for those of you that are on my mailing list, you know that we send out this awesome report every month called Snap Stats. It just gets emailed to you, and it covers Metro Vancouver, the Greater Vancouver, Fraser Valley, and it gives you all these really great stats based on your geographic location and price point. And like months of inventory, it's the sales ratio. So 21% sales ratio and greater is a seller's market. And less than 14% is a buyer's market. So it's a really quick indicator of what's happening in the marketplace. How many active listings, how many sales. So basically like months of inventory. So what we decided to do was go through and share this with you here. Let me just move myself. So let's take a look at what's been happening. Let's hone into these specific markets. We're going to do Vancouver, Vancouver West detached and Vancouver East detached very quickly here. So Vancouver downtown sales ratio is 30%. So above 21%, it is a seller's market. However, that's down from March, which was up at 42%, as well as in February. So you can see that we went up and now it's starting to come down. So 30% sales ratio, 3.3 months of inventory. So still in seller's market territory. We're going to keep an eye out on this. Here's a trend line for the last 13 months in terms of prices. 774 a year ago downtown, now sitting at 857,000. So sales are down 34% year over year, but prices up 11% year over year, and we're sitting at about 3 months of inventory. So still seller's market, but starting to shift towards that 4 months of inventory. Vancouver West Side detached, okay, for April, we're at 14% sales ratio. That is right at the cusp of a buyer's market, and we're coming off of 21% in March. So essentially a seller's market down to a buyer's market in 1 month, January, February, March, April. Yep, 1 month. And now we're sitting at 7.2 months of inventory. We are in buyer's market territory for detached houses on the West Side. So let's just see what's happened with prices over the last year. So started out at 3.3 million, sitting at 3.759. Potentially, if we see the months of inventory creeping up and holding there, we're going to see downward pressure on prices. Sales are down 34% year over year, and prices are up 40% month over month. Let me move myself here. Months of inventory a year ago, 4.5. So just over a seller's market into a balanced market. In December, we were sitting at a balanced market, and now we're sitting in a buyer's market for West Side detached. Vancouver East Side detached, so sitting at 23% sales ratio. So we're still right on the cusp of a seller's market, down from 40% month over month and sitting at 4.5 months of inventory. So we're starting to shift into a balanced market here. 13-month trend, 1.84 was your average price a year ago. Now we're sitting at 2,065,000, up 11% year over year, and sales are down 34%. You can see a year ago we were sitting at 2.8 months of inventory. Again, strong seller's market, even here in December. And today we just popped over into a balanced market inventory. So there you have it. We're starting to see some shifts, and what's coming for 2022 in our real estate market. Well, we've had pretty spectacular growth over the last couple of years. You can see from 2019 coming into COVID, that tightened up, and wow, it's been a wild ride. We've got interest rate increases that the government's talking about. The Bank of Canada governor basically mentioned that we could expect even a 0.75% rate increase June 1st. That's the next meeting where they can change the interest rate. We'll see what happens. That's pretty astonishing. I think it's a pretty strong interest rate, but you never know. The market is, and I think most of us are expecting to see another increase, whether it's a 1/4 point or 3/4 of a point interest percent. The BC cooling off period apparently is something that's approved or announced in the budget, but no details have come out and it hasn't been implemented. Same thing with the 2-year foreign buyer ban. Waiting to see all that coming through and dates when they're effective. Inventory, that's the one we really have to watch as the months come forward here into 2022. If we start to see an accumulation in inventory and a slowdown in sales, that's something to keep an eye out on. We've got the higher taxes if you sell, purchase a home and sell within the first year. The government's trying to penalize anyone who is flipping. And then we also have historic in-migration. So lots, 400,000 people coming to this country. And we also have to think about consumer confidence and demand. Jobs are strong, everything is great. Rising interest rates perhaps are going to make people think twice about how they spend their money, which of course can impact demand. Now, it is the government's job to try to reel in this inflation. They will definitely use their rhetoric to try to make that happen. Obviously, they don't have any control over the supply chain issue side of things. However, they do have control over interest rates. And one thing to keep in mind is if they do raise rates too quickly, it will have an impact, and too much, it will have an impact on the market. But then it gives them the opportunity to reel them back in and course correct. So when you're thinking about the type of mortgage product you're getting yourself into, you may want to consider that for the next 5 years. I welcome the opportunity to speak with you of your individual needs and questions with the real estate market, and I look forward to hearing from you. Thank you so much.